David, all Waymo does is seemingly scale. Last week, they announced a new factory in partnership with Magna in Mesa, Arizona to help Waymo scale. That factory is going to go up to 3,500 Jaguar I-Pace, and the Zeekr RTs are going to come online at some point. What are your thoughts on Waymo partnering with Zeekr to really scale up operations?
Well, the secret thing will be interesting because it's China, and we're in a trade war with China. Is there going to be an issue with intellectual property? Who knows? But to your bigger question about Waymo scaling, they're working with Magna. Look, they've been kind of slowly, steadily doing this. If you look at, I think, by the end of this year, they'll be in 6 or 7 cities. I had this conversation with them. It's a good number. And they don't have a lot of cars riding around, but hey, if they're going to start manufacturing them, obviously that's going to ramp up. And they're in a great spot because the technology is working well. They haven't had any incidents, either dangerous, nasty, or even just silly and aggravating for other drivers in a while. And they really, if you think about it, they don't have a lot of competition out there right now to get into these markets and get the, let's call it the Uber spot, right? Like, when Cruise was still around, they didn't want to be Lyft to Waymo's Uber, so they were in a big rush to get into markets. Look, Tesla's going to launch in Austin at some point, but at what scale and how effective will they be and what kind of growing pains will they have, we don't know. But, Waymo's not under pressure from Cruise or Tesla or, even May Mobility, any of the other robotaxi companies. I mean, all a lot of these guys are doing something, and some of it's pretty significant. But in terms of being out there scaling, giving rides to the public, bringing in some revenue, Waymo has such an advantage right now, such a lead that they can do this at a smart pace that doesn't overtax their neural networks, their finances, or the safety side of it, right? They don't have to make any compromises right now unless Tesla gets out of the gate and shows they've got something fantastic.
Waymo right now has 1,500 vehicles on the road, and the vehicles come out of the Magna factory, according to Waymo PR, will be on the road 30 minutes after they leave the factory. A few weeks ago, we had the announcement from Toyota and Waymo. Interesting enough, there was a sleuth on Reddit that compared the announcement on the official Toyota account, the Woven Planet account, and the Waymo official announcement. All different language. It seemed very, very rushed. Do you think that was in response to Tesla doubling down and saying, yes, we're going in June?
I don't know. I don't. I mean, there's probably some pressure with Waymo from Tesla, and they have to keep. I still get the sense that they're looking at Tesla in the rearview mirror, and maybe that's me projecting, but I look at it's very, very dangerous for investors or anyone to bet against Tesla. A lot of people have lost money doing that. But this is autonomy. We know how hard it is. We know that some very smart people and some good companies that were well funded have struck out. And when I think about Tesla doing this, yeah, they've had autopilot and full self-driving out there. They've gathered a lot of data, but they still haven't driven their vehicles fully self-driving without a driver in there out on public roads among the bad drivers, the drunk drivers, the pets, the fire engines, the cops, the 5-point intersections and acute angle turns. Like they just haven't done that. And Waymo did it for years. Cruise did it for years too, and they still had issues. This is a really tough thing to do. So, now if I'm Waymo, I can't take Tesla lightly, but I still wouldn't feel the pressure to go and cut deals and deploy quickly because of what they're doing.
I drive a Tesla with FSD 13 on it, and seemingly every other week or every week I see a new edge case. I learned one this week. My Tesla running FSD 13 cannot see a duck and the ducklings crossing the road. I had to manually intervene so it didn't run over. That was a new one that has to be there, and I reported it. The other thing that I keep harping on this to Tesla about, school zones. The vehicle's not properly identifying speeds for school zones. So there's a long way for it to go.
Really? So it's going faster than a school zone speed?
Yes, where the school zone is 15 miles an hour, and meanwhile, 500 feet up on the right, there's a police officer to remind you. So I have to manually take over to do it. And that's an issue that if you're going to scale, you're going to have to respect school zones.
That's a bad one, too. I mean, if somebody's not paying attention and they've got FSD engaged and they go barreling into a crosswalk, even if there's nobody there, the cops they're going to pull that guy over, and it's going to be a national incident, most likely. I mean, assuming there's a report for it. That's a bad incident.
It's a bad incident, which I believe, having using FSD 13 on a daily basis, that Tesla's not ready to go fully autonomous driver out. I just do not believe that they're ready. Do you think that Tesla will severely limit the ODD in Austin, or is this just going to be a typical Elon? Here we go. What do you see that rolling out?
That's a good question. Tesla investors this might be a careful what you wish for thing with Tesla investors who badly wanted Elon to leave Doge and get back to running Tesla. When they launch their AVs, it might be better not having him there than having somebody who's a little more cautious running things. But this is such a tough challenge. I think they'll limit the number of cars and the area to start with. They're going to have to. It's just not. I mean, they'll have a very lenient transportation department minding, what goes on with these cars, but and how they might be penalized. But still, like it's the public damage is worse than anything the government's going to do because they're limited in what they can find, and they can shut them down. But you get the public against you, and no one will run it. No one will take your car. And the business is stalled.
We saw that what happened with Cruise in Austin. There's an individual who I know, who remained anonymous. He was almost run over by a Cruise, and he flipped out. And I gave him one of the C-suite's phone numbers, and he chewed him out pretty good. And what you saw in Austin with the Cruise vehicles were not performing very well. I was in the vehicles, I'll probably say two dozen times throughout the operations there. They never performed well. If the same thing happens, it can have a potential negative backlash on Tesla while Waymo continues to operate in a very, I'll say, diligent manner.
Yeah, look, there's one thing that Waymo, particularly without competition now, I mean, they've really, I think, been maybe a little more deliberate since Cruise disappeared. They don't have a real rival who's out there actually charging revenue. So they've been pretty modest in how they do this. And look, they're expanding all the time, but they seem to be doing it at a pretty careful pace to avoid any of these kinds of problems. I mean, is Tesla going to have that kind of discipline? That's the big question.
See, that's the $1 million question. We know that Cruise didn't have that discipline. Cruise 1.0, potentially. This is potentially because we don't know what was going to happen with Cruise 2.0. They could have had that discipline, but GM pulled the plug. You cover GM. You're the best reporter out there in the industry covering GM. You just wrote a really brilliant, long, well-written piece on Mary Barra for Business Week. Did GM, in your opinion, pull the plug too early on Cruise?
Yeah, I wrote a column at the time when they pulled the plug on Cruise. And my conclusion is that they may end up looking back on this the way they look back on killing off the EV1. Now, look, there are a lot of differences between the GM of the EV1 era and Cruise today. Cruise had had competitors with Zoox and Waymo with very deep pockets to go up against. So that's tougher. There was really nobody doing EVs at the time. So it's something GM figured they could move away from. And, Tesla was founded the same year the last EV1 was pulled, but, it was a startup that, was sort of an auto industry curio for years after 2003 when it was founded. So there was less pressure then. I mean, I think GM could end up regretting this, but they did it for definitely one reason, which is their investors didn't want it. This is capitalism at work, right? GM got no reward in their share price for any sort of development with Cruise. In fact, because of the problems they had from safety and regulatory issues, it was actually hurting the company's stock. So it was a problem. And then you have the ongoing cash drain on the company, which was already about $1.5 billion a year. And if they weren't able to raise money and get somebody else to help them pay for it, that would have gotten even bigger once they start to deploy. So it was really tough. Now, could they have kind of put that in their R&D budget someplace? Yeah, I think they could have. They're still working on these cars, but without the public pressure of deployment targets, these things tend to, I think, kind of go adrift. We'll see. I just, we're already way past earlier promises to get personally owned AVs from General Motors out there. We're supposed to see that this year, I think. But I think their shareholders reward them for 20-something billion in share buybacks over the last 3 years, and not for spending money on Cruise, and that's why they did it. Could they? I mean, so my argument is, instead of buying back, I think it's like $23 billion in shares over the past, I think since 2022. Could they have bought back, 18 billion and put a lot of money into Cruise? Yeah, I think they could have, and that's the decision they could regret.
I think they're going to regret it. And now they're publicly trying to merge Super Cruise into Cruise. And the engineers I speak to say it's two different stacks, two different approaches. I don't really see that being successful. Is that just trying to salvage what's left?
I think it's kind of the other way around. I think they're getting Cruise engineers to help improve Super Cruise and make it more effective. Because the reason GM bought Cruise, going back to 2016, was they realized that the science and software they were using, the stack they were building for Super Cruise, was never quite going to get there in terms of full autonomy. And they needed something that really was a machine learning kind of system. So they acquired Cruise. So I don't think GM gets to fully self-driving vehicles by simply upgrading and improving Super Cruise over the next decade.
They're not. They're going to have a very hard time retaining talent and hiring talent from the autonomy industry. Nobody, frankly, wants to go there. On the EV front, and you wrote about this, GM's invested $35 billion in EVs with peanuts to show for it. Was that another wrong bet or a right bet? What are your thoughts on that bet?
We talked about this in the Business Week story. That's sort of a must. That's a must. I'm not sure I can consider it a bet. I think it's just a must do for car companies. In the U.S., we have a political environment that currently is running against EVs. Trump doesn't want to fund them with federal money, and he certainly doesn't want rules mandating them in place. But they have that stuff in Europe. They have incentives and mandates in China, and the technology is coming into place. And BYD has goals to be exporting half of its vehicles or half of its sales by the end of the decade, and that's EVs. And there are other really good Chinese EV makers. You don't want them getting a great advantage in cost and technology for electric vehicles and eventually finding a way into either not just our market, but markets where General Motors, Ford, Stellantis, and even the big European and Japanese companies do business, right? So everybody stands to lose to the Chinese if they surrender this advantage. I mean, I think EVs are the future. I can't tell you when that future is, but it's certainly the future of the luxury business right now. And that's where a lot of the sales are happening. So there's no, GM has to get into electrification. The question is the pace of it and how much of your electrification strategy is hybrids and this sort of thing. But they have to do it. Did they go too big too fast? You can argue that. I mean, they're primarily an American company in terms of their sales. I mean, they're selling EVs in China too, which is helping them quite a bit. But they have 12 models for sale in the U.S. market, and they probably don't need all of them. I think they would have had more if things hadn't slowed down and they stalled or canceled some of those. So you can argue they went too hard and too fast, but hey, now they have the greatest variety out there in the market. They're growing EV sales faster than anybody. Tesla has arguably done some things to lose a lot of sales. So if there's growth to be had in the U.S. market among EV buyers, and there is, it's going to go to GM and Hyundai Kia because everybody else has pulled back. BMW is still going hard at it, but that purely in the luxury market, it's GM and Hyundai Kia. Obviously Tesla, but Tesla's got to stop the decline here. And there's research I had in my magazine story that I think it was 80% of EV buyers identify as let's say somewhere on the left side of the political spectrum. I have a liberal friend who bought a Tesla within the last 6 months. So not everybody who's left of center and leftward is fleeing from Tesla, but clearly some are. And that's business for GM, that's business for Hyundai and Kia and Ford and others. But GM, Hyundai, Kia are pushing harder, and I think they're going to get that business.
The greatest advantage that Tesla has, in my opinion, as a Tesla owner, and I love it, the software. the software in the vehicle just works. It's not clunky.
It's an advantage the Chinese have too.
So how does GM, how does Hyundai, how do they compete with the Chinese? Because if you're seeing now, China's now exporting autonomy to Europe. It's getting closer. So how are they going to compete on electrification? How are they going to compete on autonomy?
I on autonomy. So remember way back when Dan Ammon was running Cruise, and he told me something very smart, I think, about autonomy. He said the world doesn't need, a dozen or 6 or 8 autonomy stacks. It'll probably end up being something like the Google versus Apple iOS. And so do we end up with Waymo versus the Zoox stack, something like that in the US, and Waymo versus a Chinese stack in Europe and Asia? We could. And so I think and GM would probably hate having to do this. It would be such a capitulation, but I could see them at some point, if they don't see enough progress on their internal stack, having to go to Waymo or Zoox and use their system. And I think other companies are going to do that. Waymo's scaling up, and is the Jaguar I-Pace the long-term answer? Or there are different types of vehicles they're going to want. I think there are, and I think you're going to see a lot of companies go toward this. I mean, look, consumer surveys and studies show that people really want autonomy.
They want it, and that opens up the whole door to licensing. So you have a pure play licensing company in Neuro. You have another pure play licensing company in Wave, which has the Nissan deal. So then would you say, so GM, no time limit here, they're going to realize they have to license, they'll license. Then what does Ford do? Because Latitude hasn't produced anything. They shut down Argo. There seems to be no clear autonomy strategy. Is Ford going to have to lean in and license something?
I think everybody is, right? I mean, none of the automakers have any sort of in-house autonomy strategy anymore. I mean, GM says they do. They don't talk about it. We don't get any updates on it. A lot of talent is left. I mean, I think, Mo Elshanaway, he was their top tech guy. He's gone. So a lot of the top people didn't stay. So they're all going to have to find a partner who's out there in the real world, improving their system on public roads with, like I said earlier, all the bad drivers, the drunk drivers, the dogs, the cats, the kids, the crosswalks, the school zones, the fire trucks, all of that stuff. It's just, the edge cases. You can't underestimate or overestimate that challenge.
There's a lot of challenges. If you look at challenges, Hyundai, they have a public partnership with Waymo where they're going to build the Ioniq 5s that will start coming in 2026. They're going to be built in the Savannah, Georgia Meta plant. They also have Motional, which we don't have any insight into what they're doing. And then Waymo goes and cuts the Magna deal. They cut the Toyota deal. Does Hyundai say, wait a second, we're just going to be left hole in the bag here and double down and try and integrate Motional into the Genesis brand, perhaps?
They could, but do we know how good their system is and how proven out it is? I mean, you do get to a point with a lot of these smaller companies, in-house companies, and we haven't talked about May Mobility because they're out there in the real world doing stuff. But interestingly, Toyota is looking at other partners, right? And I haven't gotten a good read on why that is because I thought May Mobility was their big play. But in any case, okay, everybody's going to have to go to one of these providers at some point. If autonomy becomes a thing, like rapidly in the marketplace, they're going to have to license it and cut deals, which is what they all didn't want to do in the first place. But
that's where the market's going. I was with Ed a few weeks ago in Ann Arbor, and Ed told me that Toyota has a factory ready to go in Ohio to mass produce the May Sienna minivans. And then we saw recently May Mobility is going to be running on the Uber network, and those are going to be Toyota. So perhaps Toyota's just, if you want to do, seeding the market and making multiple bets to ensure that they ultimately win.
Toyota does that. They always have a thesis on what they think will be the best way to go, but they make multiple bets. Someone told me about Toyota. One thing they do is with any business strategy, they map out the best case, the worst case, and the most likely case. And they make bets to prepare for all three. And I think that's what they're doing with autonomy. They're placing bets on multiple technologies and not overly committing anywhere and waiting to see how the technology develops and how the market develops.
The autonomy market in Japan's developing. When do you think we're going to see movement of Toyota in their home country of Japan? Because we have the Wave Nissan deal, Tier 4s over there, May Mobility's operating there.
I think with Toyota, May Mobility is their strategy in Japan, at least at the moment, right? I mean, they're funding it along with NTT. And I would assume May Mobility is using Sienna vans in Japan.
I believe so. I can't confirm. But we do know that they have an e-pallet.
May Mobility's done some cool stuff, but if Toyota wanted to buy the whole thing tomorrow, they've got a lot of cash. If they want to buy it and make Edwin Olson the CEO of Toyota Mobility, I'm sure Edwin would be pretty happy with that.
I think he'd be happy, and Ed drives a Toyota in his private life. So there we go. Then there's the company that's been dancing. You've reported on it. Your colleagues have reported on it. They finally got a deal, Foxconn. They're finally going into the automotive industry. They're going to contract manufacture electric vehicles for Mitsubishi Motors. Is that a sign of things to come with Foxconn? Because as they clearly have ambitions here.
Yeah. I mean, Mitsubishi just has such a almost no brand here. You know, they struck out in this market a long time ago. You know, like I drive by that Wordstown plant all the time, and the parking lot is always pretty much empty. They're not making much there. I think they're still making those electric tractors at the Foxconn plant. So Foxconn is, I mean, they have tremendous manufacturing capabilities, but, you know, AVs are in its infancy still, I think, in terms of a market phenomenon, and EVs are stalled out a bit. Kind of a, you know, like wake me when something happens is kind of my answer with Foxconn stuff in this market. They've got the capability, but they just haven't had any takers that could survive. Right. I mean, Fisker's gone. Wardstown Motors is gone. So Nikola's gone. They weren't working with them. But, you know, all these startups that would probably have needed that sort of manufacturing expertise are all gone. So who are they going to build for unless it's niche cars? And, you know, the major car companies that are selling EVs in this market have too much capacity, so they don't need any more capacity from a contract producer like Foxconn.
One has the pocketbooks, and they have an unforced error. Is Waymo. The Zeekr is an unforced error. We have the policies towards China coming out of the State Department. We have the tariffs. Could Alphabet potentially cut a deal with Foxconn and have them manufacture a bespoke Waymo vehicle?
Yeah, that seems like a natural deal. I haven't heard anyone talking about that, but that seems like a natural to me. And so, you know, let's sort of like, you know, blank sheet this. And if I'm Waymo and I cut a deal with Foxconn to use their EV platform, remember they basically had a white label EV they were working on, and I use that, then I'm not tied up with any specific car company. So I'm not seen as being partial to any competitor. So I can go to Ford, General Motors, Toyota, Honda, you know, whatever company I want, and say, hey, you know, we're working on this stack. We'll license it to you, or you can brand this Foxconn autonomous EV yours. There are a lot of things they could do that suddenly make them, they're no longer a biased or, you know, tied down player. They're kind of open to anybody if they do that. It seems like a natural move. I don't know why we haven't seen it. Unless they just couldn't come to a deal.
Well, let's whiteboard it, because if you think about it, Waymo provides the software for the drive. They provide the hardware. Foxconn provides the sled, the manufacturing. And then the traditional OEMs, they could design the interior. And then it's more data going out. That Google's going to ingest more data. That potentially becomes really, really interesting there.
It does. I mean, look, it is like what you're talking about is the Apple relationship with Foxconn, right? Except in this case, it's Waymo and a self-driving vehicle. It's I think what maybe Apple thought about doing a few years ago. So yeah, I don't know why it's not happening unless, you know, Waymo thinks that Foxconn and Apple are too tight and they see them as a competitor in too many other ways. But it doesn't seem like they are. It seems like a very good marriage to me.
Because depending on how the court rules, we saw the testimony from Eddie Q yesterday, it might become illegal for Google to pay $20 billion to Apple every year to become the default search. So all suddenly, now you got $20 billion back in the coffers. You can easily put it into this platform. And if you look at Waymo's, deal with Toyota, deal with JLR, which is expiring soon, deal with Hyundai, and then perhaps a deal with Foxconn. They're diversifying their base. And so they're not having a single choke point. That gets really, really interesting, and it eliminates potential risk as they scale.
No, and also think about it, like they're getting different vehicles from different manufacturers, different types of vehicles. So if they ever wanted to sell this as a personally owned AV licensed software, they're already in a number of different vehicles. But if to your point about that, if you are going to run something that's a robot driven Uber or Lyft, you're going to need different kinds of vehicles. Yes, the majority of your passengers are one person getting a ride to wherever they're going, but you will have families, you will have people who have luggage going to the airport, and you'll need bigger vehicles and that sort of thing. So you start to get a more varied fleet of types of cars. It starts to open up markets of transit for different customers. I mean, as I try to kind of see around corners and see what's going to happen next in this business, like that's something I keep an eye on. Is you'd want multiple sources of vehicles for a whole bunch of different reasons.
And they know the airport destinations historically. They can position those vehicles there. And then here's another curveball your way. Does Uber potentially license a stack from Neuro or Wave and partner with Foxconn to put more supply on the platform? Because if you listen to the earnings call Dar just had, it was fragmentation, fragmentation, fragmentation. That's really what they're going for. Then they can have a PE own that fleet and collect the check.
But does that get Uber into too heavily into the owning or creating asset business? Like they just want to run a service.
No, because the way that I see this going, you're going to have an autonomous vehicle REIT. So let's say it's KKR or it's Blackstone. They have a fleet of 10,000 vehicles. They own them. They put them on the Uber platform. Uber takes a percentage of each ride, perhaps an exclusive relationship. That gets interesting. And there is precedent here because Dara has talked about the private ownership of fleets on previous earnings calls.
If they want to do that, I mean, that's, so suddenly they have to have a bigger balance sheet to do that, or they have to borrow money to get cars and carry that. That's when the business does get tougher.
But if PE carry the cars and Uber didn't, they just get a transaction fee for each ride. That's interesting because then they're not carrying the asset.
Yeah. And that's the kind of model that the TNCs have always talked about, is having somebody else, whether it's, Hertz or Avis or Cox Automotive, somebody like that who has big lots and manage the fleet and maybe even own it. So think about, one thing the rental car companies do is they buy a bunch of cars, right? But they also issue asset-backed securities, which are backed by a bunch of the cars they own. So in the case of Hertz, like when Hertz went bankrupt, one of the big things they had to do was satisfy creditors who basically owned a big chunk of their fleet, because they bought bonds that were collateralized by a bunch of cars. Now, it was an interesting negotiation because those bondholders did not want to end up with a bunch of cars. They just wanted their money back at 100 cents on the dollar, preferably with a return. Used car values helped everybody. Used car values rebounded post-COVID and helped with a lot of that problem. But the point is, if you're somebody like Uber, you could do something like that. You could issue some sort of debt to buy the cars, and then assuming there's a value on the car, some sort of resale to it, then you find a way to finance them. One of the advantages GM always talked about with Cruise is with GM Financial, which is their own lending arm, which also, by the way, lends to dealers for dealers to buy cars that they're going to sell, what they call floor plan financing. They had a way for Cruise to finance and own a fleet. Uber would have to do something similar like that, or they find a partner who's going to do it.
And they get more fragmentation, more vehicles on the platform. And Uber seemingly every week they're seemingly cutting a new Robotaxi autonomy deal. And we have the numbers now. There's 100 vehicles on Uber's Waymo operating in Austin, and it's outperforming 99% of all traditional drivers there from a demand perspective. Where do you see this Uber-Waymo relationship going in the future? Because right now there's only two markets, Austin, Atlanta, which comes on later this summer. It just seems that Uber's truly driving significant amounts of demand.
It is. I mean, look, Uber still have a great brand name. I mean, you think about what Uber does, there's nothing there that isn't easily replaced, right? Like Cruise made a pretty good app pretty quickly. That's not hard to do. Uber doesn't actually own the vehicles, their drivers do. And they have deals with Hertz and others for their drivers to actually rent the vehicles. So it's not like they have hard assets that somebody couldn't use. There's almost no barrier to entry to that business. But they do have one thing. They've got a brand. People use Uber as a verb. Okay, sort of like, I'm going to go Xerox this paper. I'm going to saran wrap this food. They've got the brand name. And I think that does help. I think that does drive growth for Waymo and brings people onto the platform. And I think people who use Uber all the time, they see there's an option to try a self-driving car, and they're like, that could be pretty cool. And it's a way to get people into it who are already on, through branding on that network frequently. And so they'll give it a try. It's in a way, it's part of a big part of Waymo's marketing strategy in those markets.
So who needs who more? Does Uber need Waymo more, or does Waymo need Uber more?
I don't know that it has to be someone needs someone more than the other. If you were to tell your spouse they need you more than you need them, you're going to get hit over the head with a shillelagh. And if you were to say the other way around, they'd say, "Well, why do I need you?" So that's right. So I think it's just a relationship that they both get something out of. Now, if Waymo's brand name ever got big enough where they were driving more traffic with their own name than Uber's, then they don't need Uber. So, but then, if you're Waymo and you're spending your time and your money building more networks in more markets to scale up, and you don't want to spend a lot of time and money doing national marketing for recognition, then Uber's playing a big role for you and driving a lot of traffic onto your network. That's good.
Let's just use the LA market, for example. Waymo and Uber are clearly competing in that market for market share. And as Waymo brings on more vehicles, they're going to take more and more market share. And there's little caveat in there. Waymo gets cheaper insurance rates because the way that the fleet is operated is a California loophole there. What happens over time when Waymo eats into a significant portion of Uber's LA market share? Do they have to? Because to me, I'm asking that because I think that they're frenemies.
That's a good question. They are frenemies. Yeah, look, if you're Uber, you got to be pretty careful here that the company you're helping doesn't eat your lunch. I haven't really kind of reported that out and wargamed it, but it's a really interesting question. I don't know. What's happened to Uber's market share? Have they lost market share in Southern California because of this? I don't know the answer.
We don't have public data to go on. We can go on individual behavior, which we have data where the individuals say, I only use Waymo now. Maybe a quarter of a point, maybe 1 point. We just don't have any real data to point to for how much they're eating into it. I do believe when the airports get unlocked, LAX, SFO, San Jose, then you'll probably see a larger eating into their market share when the airports get unlocked, and then also highways.
Well, the question is price, right? So can Waymo do it cheaper than Uber? A lot of people don't care whether, it's a yellow cab driver, an Uber driver, or a robot, as long as they get where they want to be quickly and safely. I think the most important things for people getting in any of these rides are safety, and also, am I waiting at the airport for 15 minutes or a minute and a half? And the latter is really big because people sort of assume safety these days when they're getting in a ride. So, like, speed is of the essence, efficiency, but price. As long as all those important things are equal, can Waymo undercut Uber or vice versa? And they may have to.
And if they do undercut them, how does Uber react? Because the markets after Atlanta that have been announced have been Waymo One markets. Could just Austin and Atlanta, the two A's, be test markets to really understand here?
That's a good point, by the way. But the new markets are all Waymo One. They're not dealing with Uber, right? Miami's not going to.
No, Miami is a Waymo One market, not an Uber market. And Uber is not committed to putting an AV tier, which I thought was really, really interesting. Over time, does Uber just surrender the U.S. market to Waymo and then focus on international? Because all the deals that Uber's been focused on Autonomy lately have been in the UAE and they've been in Europe.
I think they want to be in all of the above. I don't think they would surrender the U.S. market. They've got a lot of share here. It's where they get the most of the revenue right now. You either have to form a bigger partnership with Uber or you have to go to somebody else. If Tesla works out, do you let Tesla put their vehicles on your network? Does Tesla want to do that? Or is it Zoox? There aren't a lot of options, but there could be some options.
Zoox is ramping up manufacturing. The FT is reporting vehicles are coming online next year, but we don't have a deployment to point to, so we don't have data or anything to look at. Why do you think they've been so secretive? And then they've said over and over again in the very little public statements they've given that they're going to operate the service themselves.
We just don't know how ready the technology is. I mean, you've been in their cars, I've been in their cars. It's been a couple of years, and they were pretty good when I was in it. So, and they've got, look, it's Amazon, right? They have a lot of money to develop this. So scaling, building networks, acquiring talent shouldn't be an issue for them. I don't know why I mean, I guess the answer is why tell everybody something if you're not ready to go out and fully blitz it in the market. And I think maybe if they have one like really successful market launch and they start to build it, then you'll start to hear a lot more noise out of them.
That's a valid point.
But hey, if you're trying to sneak up on Waymo, you don't want to make a lot of noise while you're doing it.
How committed do you think Alphabet is to scaling Waymo long term? And I asked that because I was like, this is impossible. We had a photo of Ruth Port at the Magna factory she put out with this really nice note, which tells me that they're committed to it because I know she was the one who killed the trucking program. How committed long term do you think Alphabet is to Waymo? And I asked that with what your colleagues at Bloomberg have covered, the potential decline of the cash cow in search.
I mean, we've talked about this. At some point, Waymo's showing great signs, right? They are growing, and the safety record's been good. Doesn't Waymo go public at some point though, and negate the need for the parent company to fund it? Like I think that's so. I think there's a timing issue here where can Waymo show enough results, show enough growth, show enough scale to get big enough for an IPO, and I think that it would be a pretty successful IPO. Can they do that before Alphabet runs out of patience and wants to stop funding it? I think probably I think they've got plenty of time with the parent company funding it. And by the way, the parent company would get some cash out of that IPO themselves. So, it doesn't seem to be a big problem because there's already been a lot of talk about a Waymo IPO and some valuations thrown out.
Yeah, we've seen the valuations. If you look at the IPO,
like 50 billion, right?
50 billion. Let's look at the roadshow. Could we potentially see Uber take a significant stake if they do go an IPO? There's a precedence there of what Uber has done in the market.
You see a lot of companies wanting to get a piece of this thing and take a stake in it. If they could build a partnership out of it as well. For a car company or Uber, they'd have to be industrial, and there is industrial logic, but they'd have to be able to get agreements with the company to do it. But sure, all that seems within the realm of possibility.
What happened in a hypothetical world if Waymo shut down the Waymo One service and merged it all into Uber?
Jeez, what would happen with Waymo or with Uber?
Uber would you wouldn't be able to compete in the market. And then Waymo Alphabet could just get a licensing fee. Because I would love to know what the costs are to run the Waymo One service versus having it all run through Uber. That'd be a really interesting financial thought experiment.
Yeah, I mean, Waymo One's kind of already replaced that in the markets where they've already replaced Uber in the markets where they're deploying without them, though, right? It seems like they're pretty well on their way to already having replaced it, and don't necessarily need it. I would think it. If I were them and I'm looking at this, I'm thinking, am I growing a lot faster using Uber or with my own app and my own advertising and marketing plan? I still think like if you're Waymo, your core competency is developing self-driving stacks and scaling up vehicles. Is it in branding and marketing? I mean, Foxconn makes iPhones because Apple's great at design and marketing and content. They don't want to manufacture. That's the best thing they do, right? Is they develop self-driving vehicle technology. They don't even develop the vehicles, and they integrate it. They're not necessarily a marketer, and so yeah, like I said before, I think Uber can bring that to them. But at the moment where Uber is, what Waymo can do, what Uber does better, or they get faster growth in the Waymo One markets than the Uber markets, then maybe they do something different.
They do something different. You alluded to this earlier. When did the car rental companies re-enter this space?
I think they're just there. They can service vehicles, and they've got storage lots. They've got parking all over the place. Particularly Enterprise, by the way. Like Enterprise has half the rental market, but they're much stronger off airport than Hertz, and I think Avis as well. Well, definitely stronger than both because they're just a bigger company. And that just gives you more places to store cars that both on and off airport that make running this business a lot easier. So you're gassing up the cars or charging them. You're doing repairs and maintenance, tires, all of that stuff that nobody really wants to do. It's gritty, but absolutely necessary. It's just a cost center, but those guys know how to do it. And so I think that's once the fleets get big enough where someone else, you're talking about 3,000 cars over time for Waymo. That's in multiple cities. That's not that big of a fleet. They can manage that. But as it gets bigger, they might want to contract that out to one of the rental companies or to Cox. One of the auction houses.
A move that's really emerging as a potential player in the space. And don't forget, enterprise has enterprise mobility, which gets interesting. But the overall question is, when does autonomy become a self-sustaining business?
That's a tough one. We haven't, because we're not getting any kind of financials yet from Alphabet about Waymo. Look, it's self-sustaining when it has good enough cash flow to keep investing in new markets. That seems like a long way off. That's why I think an IPO would be huge for Waymo because it gives them cash. But I don't think they would IPO until there's a line of sight to self-sustaining cash flow.
20 markets, 30 markets? What do you think for market size?
I mean, how many cars are they running in a market and how much revenue are they getting from each one? Look, there's a critical mass of income and cash flow. And I don't know whether that's 10 markets or 30, but they've got a ways to go, I would suspect, without having seen any internal financials.
Let's say probably in the next 5 years, you'll probably see an IPO or some sort of transaction. And if we don't, then we know for a fact that Alphabet's fully committed to Waymo.
I don't get the sense that Alphabet's running out of patience with Waymo. And again, there's that timing issue where do they run out of time and they're not ready for the IPO? I think they're ready to go public at a point where Alphabet's still pretty interested in the business. And again, I mean, they kind of have a monopolistic position right now until we see something more from Tesla and Zoox out in the market.
And we never know. At the end of the day, Alphabet can keep it in as a wholly owned subsidiary, very similar to YouTube. You just never know what they're going to do. Perhaps that's the path that they're going to go.
YouTube's a good example, too. They've been talking about spinning that out forever.
And YouTube's a cash cow. Let's not forget YouTube's a cash cow. And at some point, I will say this, that Waymo is going to generate over $1 billion a year in revenue. When that is, I don't know, but it's going to start to generate significant revenue. And if it does, if I'm Alphabet and I'm losing search revenue, I need something to replace it. And if you look at all the other bets they've made over the years, nothing's really worked besides Waymo. And I'm not saying it's working technically, not financially yet, but at some point it will.
No, there's a big question with Waymo, though, is what are the margins? Can they get pricing that is, these are expensive vehicles, they're expensive networks to maintain. You need a significant amount of scale. So the question I've always had for the autonomy business is how much scale do you need to cover the big costs and all the kinds of talent you need to run a self-driving vehicle company? So how big does this need to get to cover all of that? It's a huge question for this industry. Look, that's why it's one of the big reasons GM is not in this, right? They didn't want to spend the money on it. They saw this as being a bigger drain as they deployed. Now, part of it was investors lost patience probably a long time ago because they weren't getting any sort of boost in the share price. But still, it does take a long time to get the kind of scale they need. Think about GM's plan for this. Weren't they going to be in 20 markets? So they saw that you needed a lot of scale to make this work. Now, Waymo's cost structure might be better. Who knows? And like May Mobility has a very small cost structure, and they're still deploying. So, there are a lot of variables we don't know, but you do have to get to a certain size with this kind of business to make it a good business. And by the way, it can't just be profitable. It's got to be the kind of profits that the people who run companies like Alphabet and Amazon want.
You have to go north of 40% margin at the end of the day.
Does it have to be that big?
Okay, I'll say 30%. You're going to at least have to put a 30% margin. 40 on the high side, 30 on the low.
That could be.
Because then you're going to start getting investors' attention once that cash ramps up and it becomes profitability. Because the way Waymo's going now, they're de facto monopoly in the market. They've proven the technology. This thing could scale properly, could become a giant cash cow for Alphabet.
If it gets to scale and if they can get good pricing. I mean, you need low enough pricing to scale it, but good enough pricing to get great margins and cash flow. It's a real tightrope walk in the near term.
And only time will tell where Waymo's going to go, but I do believe they have a bright future. You always brighten my day when you come on the Road to Autonomy podcast. Dave, as I look to wrap for today, what would you like our listeners and viewers to take away with them?
Yeah, look, there's more interest in the business again because you're seeing more advances in trucking, and you're finally seeing scale up from Waymo and Tesla. So, look, a lot of stuff to sit back and watch and see how it develops.
The business of autonomy is getting interesting. Investors are paying attention once again. The future is bright. The future is autonomous. The future is building and scaling a profitable, cash flow generating autonomy business. David, as always, thank you so much for coming on the Road to Autonomy.
Great to be here, and a lot of cool stuff to watch in the next, I'd say even the next 6 months as these companies scale up. But next couple of years, we didn't really talk much about trucking, but there's a lot going on there, a lot of deploying going on, and some revenue finally being made. But the other thing, too, is these companies are getting funded, right? You're seeing funding rounds. Aurora got money, talk of a Waymo IPO, May Mobility got money, and Kodiak got money, right?
Kodiak's going through a SPAC transaction right now, so they're raising
money. So there's interest from investors in autonomy again. So that tells you, and they've seen books that you and I haven't. So, there's a light at the end of the tunnel in terms of these becoming real businesses.
There's definitely light at the end of the tunnel. And as this continues to evolve, we're going to have you back on. Let's have you on next month to do a deep dive on trucking once the Kodiak transaction closes.
Sounds good. Let's do it.